If you are 65 or older and you keep hearing that seniors got a big new tax break this year, here's the question. Thousands of people your age have been quietly asking, and almost no one is answering straight. Does that break actually put money in your pocket? Or is it only for people who earn more than you do? If you have wondered that, you are not alone. And you are not slow for being confused. This rule is genuinely easy to misread. And you are about to hear exactly why. We are going to walk through 5 of these today. In plain English. Using what the IRS and the official Medicare guidance actually say. Stay for all 5. Because number 2 is the one I built this toward. And for anyone living mostly on Social Security, it is the one that could move your monthly number the most. Before the list, quick context. This video is made for retirees and people approaching retirement, 65 and older, trying to make sense of taxes, Medicare, and benefit programs. The goal is to help you understand which breaks actually apply to your situation, so you do not quietly overpay and so you do not miss something you would qualify for. Everything here comes from publicly available official information, the IRS, the Centers for Medicare and Medicaid Services, and the Social Security Administration, along with reporting from Kiplinger and the Nonpartisan Center on Budget and Policy Priorities. And I will name each source as we go. This is educational content only. It is not personalized financial, tax, or legal advice. And nothing here is a promise that you will receive any specific amount of money. Everyone's situation is different. So before any real decision, talk to a licensed professional who knows your circumstances. I am not here to impress you with credentials. I am here because too many people who paid into this system their whole working lives are losing money to rules they were never taught. Subscribing keeps this kind of clarity coming every week. And before we start, drop a yes or a no in the comments when you first heard about that new $6,000 break. Did you assume it meant money back in your pocket? Most people did. Here is why that is understandable and why the honest answer is more complicated. Number 5, the new senior deduction and who it actually helps. Starting with the 2025 tax year and running through 2028. The IRS allows anyone 65 or older to claim an additional deduction of up to $6,000, on top of every deduction they already receive. If both spouses are 65, that is $12,000 as a couple. It counts whether you itemize or take the standard deduction. Now here is the part that is almost never explained clearly. And it is the reason this video exists. A deduction is not a check. It only lowers the amount of income you are taxed on. So if you already owe little or no federal income tax, and according to the Nonpartisan Center on Budget and Policy Priorities, that is true for nearly half of all seniors, this break does nothing for you, because there is no tax to cut. The Tax Policy Center found that the majority of the benefit flows to middle and upper middle income households. The lowest income seniors, often nothing at all. The deduction also phases out once your income passes $75,000 as a single filer, or $150,000 on a joint return. And it is not available to anyone filing as married filing separately. The action is 2 minutes when your return is done before you sign. Confirm that the new senior deduction was applied. It lives on Schedule 1A, and check that your date of birth is entered, because that is what triggers it. If you filed your 2025 return without it, you can amend. Number 3, the older add-on, and the over-withholding that quietly costs people money every month. Separate from that new break, the IRS has given every filer 65 and older a second, long-standing addition to the standard deduction for years. For the 2025 return, it runs roughly $2,000 for a single filer and about $1,600 for each qualifying spouse on a joint return. And it nudges upward with inflation each year. Stack that with the base standard deduction and the new break. and a large number of people over 65 owe far less than they realize, and a meaningful number owe nothing. The problem is that those same people keep withholding the same percentage from a pension or from Social Security month after month out of habit, handing the government an interest-free loan that renews silently every year. The form that fixes it is Form W-4V. That is how you adjust or stop voluntary withholding from a Social Security payment. The move confirmed both the regular standard deduction and the age 65 add-on were applied. Then ask whether your withholding still makes sense. If you have been overpaying for years, an amended return can recover some of that. Number 1, your property tax bill, where the biggest dollars are hiding for homeowners. For anyone who owns their home, this category typically holds more money than anything else on this list. And it breaks into 3 separate filings that most people have never completed. The first is the homestead exemption, which removes a chunk of your home's assessed value from the county's books before your bill is calculated. In most states, it is not automatic. You file a 1-page form with your county office once. The second is the senior or over 65 exemption. A completely separate application. The county will almost never mail you on its own. You ask for it by name. The third is the assessment freeze, or tax ceiling, which locks your home's taxable value the year you qualify so that your bill cannot climb even as your neighborhood's market values do. For homeowners who have watched their property value increase dramatically over the past several years, that freeze is where serious, sustained savings live. Now, the part the other videos consistently skip the figures and the income tests change at every state line, and sometimes by county. In Texas, the general homestead exemption now stands at $140,000 off school district taxes. And the over 65 additional exemption reached $60,000 after a 2023 measure. So any video still quoting $10,000 is years out of date. And the gap between that figure and the real one is real money. Texas carries no income test for the senior exemption. Florida works differently. There is an income limit of roughly $35,000 in household income, per the Florida Department of Revenue, which means the claim that Florida requires no income test is simply wrong. The one action that works everywhere: call your county assessor or appraisal district directly and ask by name whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property, and what the deadline is to add any that are missing. Renters, this reaches you too. Because every property tax increase your landlord absorbs eventually shows up in your rent. When those bills are frozen across a community, that pressure eases. Number 4, the smaller recurring bills you can stop carrying alone. The Federal Communications Commission administers a program called Lifeline that takes up to $9.25 a month off a phone bill, an internet bill, or a bundled service. Many states add their own credit on top of that. To qualify, your income needs to be at or below 135% of the federal poverty guidelines. Or you qualify automatically if you participate in programs like Medicaid, SNAP, or SSI. And separately, if heating or cooling your home puts a regular strain on the budget. The Low-Income Home Energy Assistance Program, LIHEAP, helps pay that utility bill directly. $9 a month will not change your life on its own, but it is one more recurring bill the system already decided people in your situation should not carry alone, sitting unclaimed. For the same reason as everything else on this list, you only get it if you ask, stacked alongside the bigger programs. The monthly total starts to shift. Number 2, the one I told you to stay for. For many of you, especially those living mostly on Social Security, this may be worth more than everything else on this list combined. Remember, the core problem with number 5, a deduction only helps if you owe tax. Number 2 does not care whether you owe a single dollar. There is a set of programs called Medicare savings programs. If your income falls under the qualifying limit, Your state will pay your Medicare Part B premium for you, not lower it. Pay it. Let's correct the number you may have seen recently. The standard Part B premium for 2026 is $202.90 a month, up from $185 last year. According to the Centers for Medicare and Medicaid Services, there are 3 tiers. The initials are QMB/V, and QI and QMB is the most comprehensive, because it does not just cover the premium. It also clears most of your deductibles and copays on top of it. The income limits are higher than most people expect, and many states have removed the asset test entirely, meaning savings or a paid-off home do not disqualify you. Yet the Social Security Administration identifies this as one of the most underclaimed benefit programs in the system. Millions of people who qualify right now have never applied because nobody told them it exists. The action is one free phone call. Your local state health insurance assistance program, SHIP, will screen you and walk you through the application at no charge. And here is why this is the climax being approved for a Medicare savings program. Often automatically enrolls you in extra help, also called the low-income subsidy, which dramatically reduces what you pay for prescriptions under Medicare Part D. The Social Security Administration estimates extra help is worth about $5,700 a year. One call, 2 of the biggest health cost breaks in the entire system, both available to someone who never owed $1 in federal income tax. Here is what that looks like in practice. Consider an illustrative composite. Call her Dorothy, a widow in her early 70s in Ohio, living mostly on Social Security in a home she owns, free and clear. She spent the spring expecting that new $6,000 deduction to show up somewhere in her refund. In her withholding, somewhere, it never did. She owed no federal income tax, so there was nothing for the deduction to cut. Nothing was wrong with her return. One call to her local SHIP office qualified her for a Medicare savings program that covered her Part B premium. And extra help brought her monthly prescription cost close to nothing. Her life did not change. How much of her own check stayed in her account each month did? Quick recap. Descending number 5. The new senior deduction real, and worth confirming on Schedule 1A if you owe federal tax, but zero benefit if you do not. Number 4. Lifeline and LIHEAP small, but they stack. Number 3. The long-standing age 65 add-on to the standard deduction, and Form W-4V to stop the quiet over-withholding. Number 1. Property tax homestead, senior exemption, and assessment freeze the homeowner's biggest category. But verify your own state's rules and income tests. And number 2, the one that has nothing to do with your tax bill, Medicare savings programs and extra help. Here is what to do this week, and none of it costs $1. 3, call your county assessor or appraisal district and ask by name whether the homestead, the senior exemption, and the assessment freeze are on file, and what the deadline is to add any that are missing. 2, call your local SHIP office and ask them to screen you for a Medicare savings program. 1, next time your return is prepared, confirm both the regular standard deduction and the age 65 add-on were applied, and ask whether your withholding should be adjusted going forward. And if the cost of a preparer has been part of why you have put this off, you do not have to pay anyone. 2 free programs staffed by IRS certified volunteers, tax counseling for the elderly and AARP Foundation Tax-Aide, will prepare your return at no charge and know exactly which senior breaks to look for. For most people watching, the cost of catching all of this is nothing at all. If any part of this helped, send it to one person you know who is over 65, a parent, a neighbor, a friend who has been waiting on that big new break to show up. Drop your state in the comments too, because the property tax rules change at every state line. And the next video walks those exemption forms state by state. The card is on screen now. One last thing, This is general education, not personal tax or legal advice. And these rules vary by state and by income. Confirm your own situation with your county office, your SHIP office, or a qualified professional before you act.